Today we are breaking down one of the biggest AI infrastructure deals we have seen so far, and why it could seriously reshape the balance of power in the chip industry. Lisa Su, the chair and CEO of Advanced Micro Devices, appeared on Squawk on the Street to discuss AMD's massive new partnership with Meta Platforms and what it means for the future of artificial intelligence. The headline-grabbing question is simple. Why is Meta effectively placing a long-term bet worth up to $100 billion with AMD, and what does that mean for Nvidia? Lisa Su made it clear that this deal is about placing strategic bets on who the real AI winners will be going forward. In this video, I am going to show you the clip of Lisa Su speaking on CNBC, and right after that, I will give you my own reaction and breakdown of what she actually said. Then, we will go deeper with a clear, in-depth analysis of everything you need to know about this $100 billion superintelligence deal and why it matters for investors. Trust me, you don't want to miss this deep dive about the deal. If you find value in this kind of financial breakdown, hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you do not miss the next major investing update. Now let's hear what Lisa Su had to say.
Lisa, first, I'm just going to offer you congratulations. This is a terrific deal, and I know that these kinds of things could never have happened without your hard work and the turn that you have engendered at AMD.
Well, first of all, Jim, great to be here. Thank you. It's a big day for AMD. We are super excited about this partnership, the expansion of our partnership with Meta, and it really is, another example of how, the industry is investing big in AI infrastructure right now, and this is all about having the right technologies and the right partners, together building this, AI of the future.
I know you and Mark Zuckerberg talk a great deal. What do you think the game plan is for could be the superintelligence that we keep hearing, and what does it mean for the consumer? What does it mean for Meta? What does it mean for you?
Well, I think this is absolutely, first of all, Mark is a great partner, incredibly ambitious in what he wants to accomplish in the AI world. And this is about superintelligence. This is about bringing all of the capabilities of AI to all applications around the world. And frankly, we want to make it's AI everywhere for everyone. That's our motto. And I think we very much, share that with Meta. And what we're doing here is really helping them build out their infrastructure. We're taking our technology and really optimizing it for Meta's most important AI workloads. And we're doing this over the next 5 years, over multiple generations. And so it allows us to, keep building upon that flywheel and getting a, great product and great set of capabilities out at the end.
Okay, so Nvidia has a deal. They report tomorrow. We'll probably find out more details, but it's a big deal. Billions of dollars. We know that not that long ago, Corning announced a very big deal. Neither of those deals involved Meta taking a share in them. Why is Meta taking a share in you?
Well, here's the thing that's important about AI infrastructure, Jim. We are at a time and a place where the industry is moving so fast, and it's about how do we accelerate the rate and pace of innovation. And that's exactly what our strategic relationship with Meta is all about. We've been working really well together. Our teams are very much, working on sort of the future. But we wanted to take a big step function increase in that engagement. And, that's the beauty of this agreement that we're talking about. It is actually a win for AMD, it's a win for Meta, and it's a win for our shareholders in the sense that we're deploying at huge scale. 6 gigawatts is an incredible amount of compute. We are agreeing to optimize hardware, software, and systems together, and we are optimizing specifically for the most important AI workloads going forward. So I view this as, really tying the company strategically. And when you think about, there are very few companies that can actually invest at the scale that we're talking about. It's a great partnership.
Lisa, I wanted to follow up on that particular area in terms of the warrants here. It's 160 million shares of AMD common structured to vest again at specific milestones associated with, as you write in the release, the GPU shipments and when they're achieved. You had a similar deal with OpenAI when you announced that. It was also 160 million. And some of your shareholders, a couple of them I spoke to this morning, said that's 20% of the company conceivably under warrant here. Why are you including these? You explained it to a certain extent, but the cynics would say, well, you have to because otherwise they're not going to buy your chips. How do you respond to that?
Oh, David, I would take a step back and say, look, we are sizing this AI accelerator market at, $1 trillion over the next 5 years. It's a huge, huge market. And we're actually at an inflection point where, I'm a big believer in there's no one size fits all. Frankly, you need a lot of different types of compute. AMD has all of the pieces. So we have CPUs, GPUs, we have the system infrastructure. And what we want to do is place bets on, who we think are going to be the winners in AI innovation going forward. So this is about strategic partnership. I think, everything that we do when we look at the structures of this is to ensure that it's a win-win. So everything is performance-based. There's a tremendous amount of revenue coming into AMD. Every gigawatt of compute is, double-digit billions of revenue to us. And then when you think about all of the ecosystem value in terms of increasing, and improving our hardware ecosystem, our software ecosystem, and it really accrues to every customer that uses AMD. So it is a special time, it's a special place, and it's an opportunity for us to supersize what was already a fantastic partnership.
Lisa Su comes into this interview with momentum that is impossible to ignore. The stock reaction alone tells you the market immediately understood the weight of this announcement. But beyond the share price pop, what really matters is the substance. Advanced Micro Devices expanding its partnership with Meta Platforms to deploy 6 gigawatts of AI compute is not a routine supplier deal. That is infrastructure at a nation-state level. That is the kind of scale that only a handful of companies on the planet can even contemplate. One thing I appreciate about Lisa Su in interviews like this is that she does not oversell the moment emotionally. She frames it as inevitable. In her words, this is another example of the industry investing big in AI infrastructure. But make no mistake, this is a validation moment for AMD. A few years ago, a deal like this would not even have been on the table. The turnaround she has engineered at AMD is the reason Meta is comfortable making a 5-year multi-generation commitment. When the conversation shifts toward superintelligence, this is where the interview gets more philosophical and more revealing. Lisa Su ties AMD's strategy directly to the idea of AI everywhere for everyone. That phrase matters. It signals that this partnership is not just about training massive models in data centers, but about enabling AI to touch consumer products, enterprise software, and global platforms. Meta's ambitions go far beyond social media feeds. This is about building intelligence into everything they operate. Her comments about working closely with Mark Zuckerberg stood out to me. Mark Zuckerberg is described as incredibly ambitious, which is probably an understatement. From my perspective, this pairing makes sense. Meta wants control and optionality in its AI stack. AMD wants scale, validation, and ecosystem depth. Those incentives line up unusually well. I also think it is important to call out that Lisa Su repeatedly emphasizes optimization. This is not a generic chip supply agreement. AMD is tuning hardware, software, and entire systems specifically for Meta's most important AI workloads. That level of customization creates stickiness. Once you build infrastructure like that, you do not casually rip it out and replace it. That is a long-term competitive moat, not just short-term revenue. The comparison to Nvidia is unavoidable, and the interview does not shy away from it. Nvidia is still the dominant force in AI accelerators, and everyone knows it. But what caught my attention was the question about why Meta is taking a stake in AMD when similar megadeals with Nvidia or others did not involve equity. Lisa Su's answer is subtle but revealing. She frames the equity component as a way to accelerate innovation, not as a bribe to win business. Cynics will absolutely say this is AMD needing to sweeten the deal to compete with Nvidia. I get that argument, but I also think it misses the bigger picture. Meta wants partners, not just vendors. Taking equity aligns incentives over multiple generations of hardware. It forces both sides to care about execution at a much deeper level. Personally, I think this is one of those cases where the market overreacts emotionally to dilution headlines without fully appreciating the scale involved. 6 gigawatts of compute is enormous. Lisa Su points out that every gigawatt translates into double-digit billions in revenue. If that math holds, the warrants become a footnote compared to the long-term revenue stream and ecosystem lock-in. The discussion about warrants and shareholder concerns is where Lisa Su really leans into strategy. She talks about the AI accelerator market potentially reaching $1 trillion over the next 5 years. That number is staggering, but it also frames why AMD is willing to structure deals this way. When the market is that large, winning early and at scale matters more than protecting every percentage point of ownership in the short term. I also agree with her point that there is no one-size-fits-all solution in AI compute. This is where AMD's portfolio matters. CPUs, GPUs, and system-level infrastructure give them flexibility that few companies can match. Meta does not want to be locked into a single architecture forever. AMD offers optionality, and that optionality has real value. What I found most compelling is her framing of this as placing bets on who will drive AI innovation forward. This is not just about Meta. It is about building an ecosystem that benefits every future customer AMD serves. Improvements made for Meta flow downstream into better hardware and software for everyone else. That flywheel effect is something Nvidia has mastered, and AMD is clearly trying to replicate it at scale. From my own perspective, this interview felt like AMD stepping fully into its role as a top-tier AI infrastructure player, not an alternative or backup option. The tone was confident, not defensive. The scale was bold, not incremental. And the partnership structure suggests AMD believes it belongs at the center of the AI build-out, not on the margins. If there is any risk here, it is execution. Deals of this size leave no room for missteps. AMD has to deliver generation after generation, on time, at scale, and with competitive performance. But if they do, this Meta partnership could be remembered as one of the defining moves of the AI era. Overall, this interview was less about celebrating a stock pop and more about signaling intent. Lisa Su was telling the market, competitors, and partners that AMD is all in on AI infrastructure, all in on strategic partnerships, and fully prepared to compete at the highest level for the next decade. And after watching this, it is hard not to take that message seriously. Now, I'm going to walk you through this most significant AI infrastructure deals in tech history and explain why it matters to investors, the future of AI, and the broader semiconductor landscape. In this groundbreaking new agreement, AMD and Meta platforms have expanded a strategic partnership under which Meta will deploy up to 6 gigawatts of AMD's Instinct family of GPUs to power AI workloads across its data centers. This is not a small-scale supply agreement. At typical pricing and utilization rates, the total theoretical value of this multi-year engagement can exceed $100 billion over time. Meta will be deploying this computing power across multiple generations of products, beginning in the second half of 2026, with shipments of custom-configured MI450-based chips and supporting ePYC CPUs built on a rack-scale architecture jointly developed with Meta. To put 6 gigawatts in perspective, that is a massive amount of compute capacity. We are talking about a level of power that only a handful of the largest hyperscalers on the planet ever seriously pursue. Only a few companies outside of these hyperscale data center operators deploy hardware at this scale, which underscores how serious Meta is about building AI infrastructure. This alone is a validation of AMD's technology roadmap in a market long dominated by rivals and often seen as a place where AMD was playing catch-up. What makes this deal especially interesting is the fact that Meta will receive performance-based warrants that could eventually give it up to 160 million shares of AMD common stock as certain technical and commercial milestones are reached. Those warrants are priced at very low exercise levels and tied to GPU shipment volumes as well as AMD's stock performance. If all milestones are achieved, Meta could own close to 10% of AMD. That kind of equity component ties both companies' incentives together over the long term, aligning them more tightly than a traditional vendor-customer relationship. Now let us break down why that matters from an investor perspective. AMD is not just a supplier in this arrangement, the company is a co-designed infrastructure partner. In the press release, Meta and AMD stated that they are aligning roadmaps across silicon, systems and software, which means Meta is trusting AMD's technology stack from the ground up. This is a big step for AMD because it signals confidence at the highest levels of one of the largest AI builders in the world. Many thought AMD would remain a distant number 2 in AI compute, but this partnership changes the narrative into one where AMD is a central player in next-generation systems. From a competitive advantage point of view, AMD has built a portfolio that includes the Instinct GPUs for accelerated compute, ePYC CPUs for general-purpose and orchestrating workloads, and Helios rack-scale architecture that ties these elements together into a coherent system designed for AI at hyperscale. This full-stack approach is nuanced and powerful because modern AI demands not just raw chip performance but system-level efficiency, integration, and scalability. AMD's ability to deliver across multiple layers gives it a durable moat in this segment. One thing worth noting here is that Meta's CEO publicly framed this partnership as an important step toward building personal superintelligence. That phrase has become a rallying cry in AI circles referring to highly advanced systems designed to deeply understand and assist individuals at a personal level. While that concept still feels futuristic to many, The investments required to get there are grounded in hardware build-out like what we are seeing in this AMD partnership. For investors watching the AI arms race, the fact that Meta is doubling down on diverse compute partners beyond a single supplier is a strategic hedge and growth signal. Before we go deeper into the financial and strategic implications, let us take a moment to consider what this means for AMD as a company. AMD matters because it has transcended its traditional role as a CPU and graphics chip maker to become a serious contender in data center scale computing. Its product portfolio contains offerings that serve general compute, accelerated AI tasks, and integrated systems, positioning the company to capture value across a broad array of workloads. Unlike companies that focus narrowly on a single product slice, AMD's diversified chip ecosystem gives it optionality as computing trends evolve. Now let us talk about growth drivers. First, AMD's AI revenue is expected to grow substantially with this expanded partnership. In comments accompanying the announcement, AMD emphasized that data center AI revenue from this deployment could run into double-digit billions per gigawatt. This revenue stream is expected to be accretive to earnings as the shipments scale over the multi-year timeline of the deal. That alone represents a powerful growth vector relative to AMD's past performance. Second, the structured nature of the warrants aligns long-term interests. Meta only gains its stock tranches as it achieves specific GPU deployment milestones and the underlying share price hits certain thresholds. This means AMD is incentivized to execute on performance and delivery schedules, and Meta is incentivized to make good on its compute purchase commitments. From a strategic investor standpoint, this kind of alignment reduces execution risk on both sides. Third, AMD's collaboration with Meta on rack-scale systems and custom GPU variants indicates that we are not talking about off-the-shelf products. We are talking about bespoke compute solutions co-engineered to handle the most demanding workloads. That means AMD is moving up the value chain toward higher margin, specialized infrastructure solutions rather than commodity components. This increases long-term earnings potential and further reinforces AMD's moat in AI compute. Now let us dig into the economic mechanics of this deal, and this is where many investors start asking tough questions. The reason is simple: AMD is effectively offering equity as part of this partnership. Some shareholders worry that awarding warrants to a customer could dilute existing shareholders or send mixed signals about supply-demand dynamics, but the way this structure is designed tells a different story. The warrants vest only if specific milestones are met and if AMD's share price rises with demand execution. This is not a handout. This is a mutually beneficial incentive structure that mitigates risk for both parties while giving AMD a chance to capture consistent, predictable revenue over time. From a financial context, let us be crystal clear. AMD's stock has reacted positively to reports of this deal. Shares jumped into double-digit percentage gains on the open following the news. This reflects investor recognition that AMD is no longer on the fringes of AI infrastructure. It now has a seat at the table alongside the biggest players in tech, and one of those players is willing to put significant capital behind a long-term commitment to AMD's technology. Personal perspective here. I think this is one of those inflection moments in AMD's evolution. For years, the company has been viewed as the secondary option to longtime leaders in AI chips. This agreement changes that narrative. Being able to co-engineer with a hyperscaler of this scale elevates AMD's credibility and shifts the perception from challenger to essential partner in AI build-outs. Plus, the diversification in revenue sources that this represents cannot be understated. I also see the structured equity component as a smart move. Yes, on the surface it appears like dilution, but when you look under the hood, it ties success directly to performance and stock appreciation. That aligns shareholders with long-term value creation, and in my view, that is far more powerful than a simple purchase order agreement for chips. Another important point to consider is that AMD's involvement includes not just GPUs, but also CPUs and system architecture. CPUs are often overlooked in the AI discussion, but as infrastructure scales, efficient general compute for orchestration and management becomes increasingly important. AMD's leadership in high-performance server CPUs with its EPYC family gives it a distinct edge in this regard. All of these elements together position AMD as a full-stack compute supplier. This is different from being a component vendor. This is more akin to being a strategic partner in building the future of AI infrastructure. Let us talk risk. Some analysts have noted that large equity incentives could indicate that AMD had to make the deal more attractive due to competitive pressures. That is a fair concern. However, I think it is equally fair to say that Meta sees value in maintaining a diverse supply chain and reducing over-reliance on any single provider. This diversification strategy is something we are seeing across large tech firms as AI requirements skyrocket and supply chain bottlenecks become more visible. Another risk is execution complexity. This deal spans several years and multiple product generations. That means AMD must deliver consistently over time or risk losing momentum. Investors should be aware of this timeline and consider execution track record as a key factor. However, AMD has demonstrated strong execution to date, and its track record in data center performance has improved dramatically over the last several years. This deal is a further vote of confidence from one of the world's biggest technology buyers. The AMD and Meta expanded strategic partnership represents one of the largest AI infrastructure commitments we have seen. It validates AMD's position in the market, aligns long-term incentives around performance and growth, and positions AMD as a comprehensive compute partner in one of the most dynamic technological shifts of our era. Before we wrap up, let us take a broader investing view of what this means for AMD specifically. When evaluating a long-term investment, you do not just look at current revenue streams. You look at where that company is positioned in future growth markets, how durable its competitive advantages are, and whether it can compound value over the long run. That is exactly why this partnership deserves attention for serious investors. The AI infrastructure market is expected to grow exponentially over the next decade. Demand for specialized AI compute platforms is not slowing. Data centers are transitioning to architectures that handle both training and inference at scale. In that context, having a diversified product portfolio from CPUs to GPUs and rack-scale systems gives AMD optionality that many competitors lack. This breadth is a huge structural advantage that can translate into durable growth. From a strategic standpoint, AMD's ability to secure multi-generation commitments in a market long dominated by a single supplier suggests that the industry is recognizing value in alternative architectures. This diversification is healthy for the broader ecosystem and underscores that performance and efficiency are not exclusive to one player. That competition benefits customers, developers, and investors alike. However, no investment is guaranteed. Investors should consider that AMD competitors remain aggressive in this space. Execution risk, supply chain complexity, and technological shifts can influence outcomes. That said, AMD's moves here show confidence and momentum that cannot be ignored. This video is brought to you by Value Stocks Investing Master Course. If you are looking to grow your wealth by investing in solid, undervalued stocks, but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Now I want to hear from you. In the comments below, tell me whether you think AMD's strategic partnership with Meta gives it a lasting advantage in AI infrastructure. Do you believe this equity incentive structure strengthens or weakens AMD's competitive position over the long term? Let us get a discussion going. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members get full in-depth analysis on most of the stocks mentioned here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. Do not forget to like the video, share your thoughts in the comments, and subscribe so you do not miss the next important investing update. Thanks for watching, and I will see you in the next one.